But as well as these stocks have done, or maybe because of it, the question many have is, have valuations gotten out of control? Well, we don't know, but let's ask somebody who does. Aswath Damodaran is professor of finance at the NYU School of Business. They call him the dean of valuations for a reason. Aswath, great to have you on. Perfect day for it. Have valuations gotten a little bit stupid, or are we okay?
I think for the last 10 years, we've had this conversation over and over again. When markets reach a new high, we say our market's crazy. And experts like me come on and we say markets are too rich, you got to sell. And 2 years later, we repeat the whole process. Over the last 3 or 4 years, I've decided that markets maybe are more trustworthy on this than experts are, that the markets seem to figure things out. When you look through this year, there have been two phases to the market. Through April 8th, tech especially was beaten up. The Mag 7 collectively lost, I think, $2 trillion in market cap just in that first 3 months. Between April 8th and today, you look at tech, it's come back. Not just come back, but it's become one of the strongest sectors again, the S&P. So this is a long-standing story, and the story has legs. Is the market rich? Absolutely. Is it underestimating some of the risks that are probably around the corner? Maybe. But given that these risks have to show up in the numbers, which should be in the economy and in earnings, until that happens, I think markets are holding on and saying, hey, we don't know what's going to happen, so we're going to price in the expectation that things are going to be okay.
Do you think the market is overreacting to the Federal Reserve news today?
I think so. I mean, I think I've written extensively about the Fed and Fed rate cuts not really conveying much to the market other than something for us to all talk about. I mean, they don't even affect the one thing they're supposed to affect, which is interest rates, traded rates. They might affect the Fed funds rate, but Treasury rates themselves have a life of their own. So it'll be interesting to see if there's a Fed rate cut, whether the T-bond rate drops below 4%. My guess is it will not, because as long as inflation stays at 2.5, 2.6, 2.7%, the T-bond rate is destined for 4% plus. So it'll be interesting to see what the bond market does if there's a Fed cut. My guess is it won't do much, and stocks will have to retrace some of the upswing you saw
So
today.
what do you, okay, fair enough. And by the way, I wouldn't necessarily disagree, as you might have heard at the top of the show. So what do you attribute today to then?
Hey, you know what? The game of expectations keeps getting reset for this market, and sometimes just delivering what was expected becomes an unexpected plus. I mean, it happened with tariffs. The same thing with rates. I think for a period there in the middle, there was worry that inflation would continue to go up and rates might continue to go up. I think part of it is expectations keep getting reset, and and you beat those expectations, market viewed as a positive surprise. It's a very strange twist on the expectations game, but it is what I think is driving the market today.
Yeah, and, we talked earlier in the show about next week, we get the Fed's preferred measure of inflation, PCE. What if that were to come in hot? I mean, I read Powell's speech 3 times, Aswath. I'm not, listen, the market's going to do what the market's going to do. I'm not here to tell the market it's incorrect. It's not my job. It's obviously interpreting it one way. I don't read the speech the same way the market appears to be. Do you?
Yeah. I don't either. But in a sense, in this case, I think the market views absence of bad news as good news. That Powell did not come in and say anything explicitly about not cutting rates. So I think in many ways, the market is reading in whatever it wants to read into this process. I think the feeling the market has is the pressure on the Fed to cut rates is so strong that even if it's not the right thing to do, the Fed will actually cut rates. That's not a great thing for a central bank to do, but I think we're in that position right now.